Hello and welcome back to my channel, everyone. It's Ron Parker here with Ron Parker Trades. I will be sharing with you today how I personally define the trend. How do I pick a direction for the day? How do I pick a direction intraday as price is playing out? What keeps me on the right side of the move? And doing so, we need to define the trend. So that's going to be the topic of today's video. We are going to be zooming out a little bit before we zoom in on the charts, and we're going to be taking a look at how we actually define direction, how we look for opportunity in the markets day in and day out. So first things first, I will be sharing a disclosure with you. Remember, I am not responsible for your trading, and this is just educational purposes only. Though there is absolutely the benefit of profiting from, being super educated and learning to trade, I am not personally responsible for your losses. So please read the disclosure and check that out. Now let's get into today's video. We are going to do a screen share of TradingView as normal. As most of you know, this is my charting platform. I use TradingView quite religiously. It's amazing and super helpful. I don't care what kind of broker or trader you are, or broker you use, or trader you are. I think TradingView is super helpful. So if you don't already have it, go download it. Go check it out. Everything I'm going to be teaching you is going to be taught on TradingView. This is how I mark up the charts, define my trades, get exact entries and exits. This program does it all for me, along with my custom indicator, which has done a lot of the heavy lifting, especially as of lately. So, defining the trend. Now, first thing, you need to understand that there's different types of trend. We could be trending in a day, like intraday, meaning as the market opens, we could actually be trending in one direction on the smaller time frames. So imagine like a super zoomed in view. We are now trending on that time frame. Okay. But then if you zoom out, you could be seeing a different type of trend, right? You're seeing the larger time frame context. And so traders need to understand that there's different trends. There's intraday momentum, and then there's the big picture direction and momentum, and they're separate. What I aim to do is align the big picture direction with the zoomed in what's happening now direction and trend. So I think this trips up so many people because there's so many different ways to actually define the trend and pick a direction. Whether you use VWAP, support and resistance, EMAs, there's many different ways that people can actually define or a bias or pick a direction for the day, week, month, however. Okay. Now, as many of you know, I personally advocate for a 5-day trend. So we're really tracking the movement over 1 week of trading to define direction and strength. Okay. Now on my screen, if you see here on the trading view, I've got a bright yellow line plotted on the screen. I'm going to draw this arrow so you can see the line that I'm talking about. This is an exponential moving average. Now, depending on what time frame I'm looking at, the EMA will automatically change. That's just a perk of my custom indicator that I built for this. But just know that I use a 5-day trend to define directional bias. So wouldn't you look at this and clearly say there's a positive upslope to my EMA? If I personally define my bias using a 5-day trend, and this EMA is representing a 5-day trend for me, I think it's super clear to me that the yellow line is got a super positive slope from the left side of the screen to the right side. Wouldn't you say? Wouldn't you say that clearly there's a strong angle or degree of slope in this price action in the EMA? Okay. So I like to do a top-down approach when I'm defining the trend. I zoom out first. So I'm going to go actually to something like a 4-hour so you can really see the big picture. Okay. Now you can see major levels. I tend to draw my major levels off of the larger time frames. So when I go to something like a 4 hour chart, you can see here I'm marking major areas where the market's touching and responding in a big way multiple times. So just to give you a couple ideas of why these lines are drawn, you can see the reactions as we cross or touch these areas. And I find it really important for people to zoom out first, mark those areas. Now, I do this every night. Every day at 8 p.m. my time, I sit down, I bust out the laptop, and I just do a pre market prep the night before I actually trade. Why do I do it the night before? Because I personally find that if I don't do it the night before, that I could potentially wake up that next morning and skip a very important step in drawing these support and resistance areas, these areas that I need to watch out for, because ultimately these could be areas that trigger trades for me. They could be areas that I need to make sure that there's enough room for my trade to play out and profit without hitting one of these major levels. So I draw these first. No, the drawing these lines doesn't necessarily help define the trend, but we can zoom out and on this chart and also see that we did have a clearly positive slope in price action. So this entire time, from like this section here, this entire section, you can imagine the bias that we wanted to develop was definitely in the long direction. We wanted to be buying as much as possible and avoid selling unless you're absolutely sure that this is a grade A look and trade, that it's like you're going in with context, knowing that you're fighting the broader trend if you're trying to sell in there, right? Doesn't that make sense? We want to trade with as many traders as possible. So we will align ourselves with those traders. So if you zoom out a little bit, you can see some of these areas, you can see the overall structure. And then now if you'll notice, things are changing a little bit. We're starting to see heavier selling pressure. So we're kind of at this pausing point where, the broader trend, the move is clearly long. However, we need to zoom in for a little more detail to get a direction intraday because things ebb and flow pretty constantly. Things change all the time. So zooming in gets us in the alignment with what's happening right now. So imagine the big picture is what has happened, but as we zoom in, I'm going to go from a 4 hour to a 1 hour so you can see a little more clarity. We're starting to get a little bit more of what's happening the last couple days, over the last few weeks. And again, our EMA is going to do the heavy lifting for us. Wouldn't you say that in this section here, there was clearly a positive slope and clear direction of my trend? Price action was very directional. Yet, if you go to other areas on the chart, the direction is a little less clear. Yes, we had some positive slope in the EMA, and we could have taken some trades in here to go short, like on these days here and here. But if you look on day 3, where I drew the X, you can notice that things changed. The EMA started to get flat on that 3rd day. There was no slope, and we were also crossing above that EMA. So then that's signaling to me that things might be shifting, that at least temporarily, things are no longer selling. We could, the pressure for selling is actually drying up, and we're starting to shift to a potential new trend. Now, we, of course, wait for confirmation of this new trend to actually play out before we take trades, but this should get your gears turning and ideas flowing on how we're actually viewing the market on a daily basis. So, for me, simply put, when the price is below this EMA, I'm looking for shorts primarily. Now, obviously, there's some areas on the chart where price crossed above my EMA in those times where the EMA was flat. And that should be a word of caution for you. It's not necessarily, oh, we go take a long now just because we crossed above the EMA. We could look for context or clues. Are we going to continue short, or are we breaking to a new trend long? I tend to lean towards holding that continuous trend. So if we were short coming into this move or into this day, you can see we sold off and then we traded sideways above the EMA and such, right? Holding below this higher time frame level marked in purple on the screen, okay, which I'll highlight here. You can see this acted as an area of resistance, and price just could not get back above it. So what happened when price couldn't get back above that area? Well, we started to sell off. And that sell off was a ding ding ding, a like clear signal for me to get back aligned with the trend, which is short, and take a short directional trade. So, what do I mean by that? Let's just make it clear. We were clearly short biased from here to here. Things were moving down. EMA is holding very cleanly, and the candles are gray, which the candles are colored for me based on if they're above or below my EMA, which helps keep me on the right side of the trade. When the candles are gray on the higher time frames, I really want to be looking for the short direction. When the candles are green for me, I start to look for the long direction. But remember that exception, if we're short before the consolidation or right before we go and cross the EMA, the crossing the EMA is like a warning sign. You don't want to see it crossed because in a sign of like in strength, we hold the EMA. And you can see that example here where we're holding below the EMA before it breaks lower. That's a sign of strength. Just the fact that it's touching the EMA and bouncing around here is telling me that's an area we like to sit out of, wait for additional confirmation. Okay, so I personally define the trend using a 5-day moving average. It's really representing what price action's done over the last 5 days. Now, again, my indicator plots that for you. No matter what time frame you're looking at, it's automatically going to plot the same EMA across all of the time frames, anything 5-minute or above. Okay, so if you'll watch, let me hit the reset view and show you. So the 4-hour, you can see the EMA. We had that price running up, and now we're trading a little sideways here. If I go into the 1 hour, we're zoomed into that sideways area, right? And the EMA is looking flat. The 15-minute, same thing, just a closer look at it. And you can see how this acts as support and resistance for traders real time. Look how traders held this EMA looking to continue for bullish momentum. It was like an area of support after a pullback. You can see this clean pullback here into this area. And these EMAs are respected all the time. All the time. Check this out. I'll just go to some other ones. Look at EMA acting as resistance here. This whole day here held that EMA. And so what's the directional preference if we're holding below the EMA? Short. When the candles are gray and we're below my EMA, we're looking for shorts only. Okay? Same here. Candles were green above the EMA. My bias should have been long. But something happened when we hit this major time frame level. There was a major reversal, a big sell-off. Volume came in and things started to break down. So the trend started to change. We're coming back to the EMA. We not only came back and touched the EMA, but we crossed it. So that's a big short signal. On this day, I might have been weary about taking a short up here where I circled on the top. But by the time it's breaking my trend EMA and barreling lower and holding, the quality of that short trade goes up exponentially. Why? Why does that happen? Because if we're above that EMA, people are looking for this to bounce off the EMA where price could have barreled lower like this and bounced to reclaim. But it didn't. It didn't. Nobody showed up and supported it. So it continued to go lower. And that was my cue beneath the EMA in this area that I can be short. And again, the candles are doing the work for me. The candles are gray. I should be looking for shorts. Okay? Now, obviously we want a strong slope to the EMA. the EMA being flat like it is right now, kind of on this current day, this after hours, you can tell that it has it's got some positive slope to it, but it's not very strong in comparison to a day like in here, where the EMA is very positive sloped. We're holding the EMA very cleanly and it's respecting it very well. To me, this is a sign of strength. So I trade differently depending on what I'm seeing around the price action and this EMA. Now, to simplify all of this for you, I have custom built this indicator to automatically do all this hard work for me. So I'm not sitting here every day having to try and decide which direction based on where we're bouncing and if we're above or below the EMA necessarily. My custom indicator knows what time frame I'm looking at. When we're above the 5-minute time frame, anything above, we're in context mode, meaning that we're looking at context around levels, the trend, strength, and such. But anytime we zoom in to a 5-minute or lower, things change for me. All of a sudden, my indicator pops me in execution mode because it's time to take a trade. If I'm zoomed into a 5-minute or lower, it's because I spot a huge opportunity on the higher time frame, maybe a reversal or continuation, and now I'm zooming in and my tools need to be different. My tools need to be aligned with what I'm looking at on the screen. So my indicator automatically pops up my trade window. It's a table. It's a table that helps keep me on the right side of the trade. Now I'm going to go to an example that we looked at earlier where it was a clear directional bias. Let's go to this short example. It's just a great day to use the indicator and review. Okay, so without even having to zoom out, my indicator is already telling me a lot of the information I need. And I've hit replay. We're actually going to replay live a trading day that happened. This was Tuesday, the 9th, June 9th. And you can see here on my indicator some key things. And if you need to, you can zoom in on your phone or your screen or however. But the table says trade direction is long. It's telling me I should be looking for buying. Okay? However, if things change and it's no longer telling me to look for buying, it will change to short. Okay? You can see here that it's grading the opportunity real time. It says grade C, to wait for key levels to get broken. And then it says key level, and it says the 5-day trend is bullish. So that 5-day trend little table is telling me that the indicator already looked at the higher time frame EMA, and it knows if we're above or below that EMA. If we're above that EMA, it's bullish. It even knows the slope of that EMA as well for added confirmation of strength. So it's a very smart indicator that knows that background trend that I like to track. Okay? So it's got a red X for key level saying we're not above the key levels that I want to be above before I place any trades. I not only trade in the direction of the trend, but I only trade in areas of strength in that direction. So for me, it needs to be above or below, depending on what direction we're trading, above or below key levels. So very quickly, I can look at my indicator, and if there's a red X on the indicator for key levels, I know it's not time for me to take trades yet. Because I trade continuation, I look for signs of strength. I want a trending environment. I'm not going to get trending environments if we're below key levels, okay? It also gives me some other cool features which you can check out in other videos, like the ATR, current volume, session volume relative to other sessions. And it knows, my indicator knows if volume today is higher than average days. In the last 10 days, is today's volume higher? Are there more participants? Because that could be an early clue that we might see a trend day. So my indicator tracks that stuff for me. Let's go ahead and press play, and you can see what happens. So right now, the indicator is printing trades. It's saying printing opportunity. Let me slow this down, actually. This is a little too fast. Okay. We notice that the indicator was adapting to every candle. It knows what the context was candle by candle. So for example, the first few minutes into the trade, or into the day, the indicator was telling me to wait. It's gray. It's telling me to watch price action. It's not telling me this is a good area to look for continuation trades. Let's press play, give it a little more time. Okay? Now things have changed. It knows that volume's really high. It knows we've broken key levels. Okay? And though a lot of you might go, oh, this is an A grade opportunity or an A plus, it's got all the stars are aligning for this trade for continuation, we enter on pullbacks. I'm going to zoom in a little bit. I personally use a 2-minute chart, so this will help me explain this better. But I look for the pullback, the first pullback after we break above that key level. So yes, we broke the key level that I wanted, but now we need to see it hold that key level. Confirmation that things are going to go higher from here. So if I were sitting here on this day, yes, I would be looking for a long trade. We're above VWAP. We're above our 15-minute EMA for our trend. Our trend EMA is bullish. It's got a strong slope for a bullish slope. Okay? It knows that stuff. It knows we're on pretty high volume at 0.92 relative session volume. So we've got a lot of participation. Okay? But here's the catch. We don't take trades just because it crosses levels. I look for that level to get crossed, my indicator to tell me, hey, this is a long opportunity, a grade A setup, blah, blah, blah. But then I wait for a pullback and resumption. So you'll notice as price plays out here, we do get that pullback. But what happens? We broke back inside that level. We're back beneath the key level. Okay? And so my indicator automatically adjusted real time to what just happened. We're not above that key level anymore. We're not allowed to look for trades. We need to wait. There's too much indecision, too much fighting between buyers and sellers. It knows that things are not aligning. They started to align as we got above that key level, and we saw that pullback, but that pullback didn't give us an area of entry because it didn't resume the trade. It didn't resume in the direction that we expected it to go. So I never entered. Instead, we start to break down, and the indicator is going to catch up real time. Okay? So right now it's telling us to wait, that the 5-day trend is still showing bullish, but we just crossed below VWAP, and we're barreling lower. Can't we take a trade now? Not yet. Why not yet? Because this hasn't given us enough edge, enough reason to actually go and take a trade. Let's actually let price play out a little bit further, proving itself that we're in a good area to take trades. So, and you'll notice already the indicator's starting to adapt to this price action. It's now saying trade direction is preferred to be short. That it's still below key levels, or technically above key levels in this case, because we want to break below them to be short. But it's giving us a grade C. It's telling us to wait for that key level to get broken before we take a short opportunity. Okay? Because to get an advantage, to have an edge in trading, you need to have the market kind of give you some before you just jump in on it. It's like you need to see it confirm direction. So you want to see a sell-off. You want to see some major buying. Then you wait for the pullback and the resumption of it. And that's what this indicator is doing for me, is helping me track that. So we know the market just barreled lower after failing to hold above that key level. Now watch what happens as we approach that key level to the short side, which is overnight low. Okay, it's the white line on my screen. We just crossed the overnight low. Okay, now things have changed drastically. if you weren't already in short off of this nice little breakdown right here, right? Our indicator is telling us that conditions are improving. If you haven't already noticed, volume is increasing on this move down. If you haven't noticed, our grade just became an A plus opportunity. This sell-off is good for our thesis of the market going short. And guess what? Now on a 15-minute time frame, or on our higher time frame levels, we're now bearish in our trend. You remember that when we zoomed out and we looked at the trend to define direction? Well, this is telling me, without even having to zoom out, that we've just crossed below the 15-minute EMA. So I'm going to go to the 15-minute and show you. We've crossed below it. Oops. Let me delete my little arrow and go back to the 15 so you can see. If you'll notice, we've not only crossed below that EMA, but now we're below the key level. So things are getting, they're stacking. It's stacking advantage in our favor for directional bias. Okay? So now that we've got an A plus opportunity area, remember, this doesn't tell you when to click the buttons. It's finding the high probability continuation areas where price is likely going to resume in the momentum that it's giving and offering. That's where we get edge. That's where we put our trades on. So we're very close to putting a trade on. Very close. It's now giving us all the confirmation. It's saying short, A plus prime grade trade, which is the absolute best. A plus is the best grade given. It's telling us bearish for that trend because we're now below our trend EMA. And we've confirmed key levels. So now I'm interested in taking a trade. I'm going to wait for a pullback and a resumption before I take this trade. I'm waiting for this pullback. We're getting the pullback into our EMA. And keep in mind, this EMA is automatically plotted for you on the lower time frames. It's basically the 5-minute 9 EMA tracked across anything below 5 minutes. So if I go to a 2-minute, 1 minute, it doesn't matter. These lines are going to be the same. You're tracking the same move. If I switch to a 5-minute, that's the same EMA you're seeing in yellow. It's the same VWAP, the same key levels. So nothing's changing but besides the actual candles and the level of detail that you're getting in the volume, right, by zooming in. So anyway, really cool feature. But watch as this gives us a resumption. Bam. Now, it just jumped 2 candles forward, but that's okay. We're going to go back 1 candle. This candle right here, I'm going to press play. Boom. Replay can be troublesome sometimes. Let's say, for example, we took this breakdown. I wanted to have it show an entry on this right here, okay? So I'll just draw the bracket. We're going to target our 2 to 1. This is how I trade. I'm targeting a fixed structure from my risk. I'm risking 1 to make 2. And if you haven't already watched the video on risk management, go watch that. That'll help you, okay? But this is how I trade. So I would have already gotten short as the volume kicked in here and the price is resuming in the direction it came from, the short direction. We're selling. Okay, so I've entered in this A plus grade trade based on my indicator telling me I should go short, that this is an A plus opportunity. The broader trend is bearish and key levels are confirmed. So I have so much confidence to put this trade on without having to think so much about it. The indicator's got my back. Okay? So I'm going to press play. Once our take profit actually gets hit, which that was very quick. Not quite out yet. Almost touched it there. Do we need to manage this trade? No. We do not manage the trade. We just set it and forget it. Now, we've hit our 2 to 1. So I've officially locked in profits. Not all of the profits. We're going to trail some. Okay? We're going to trail some of this position that we put on. we're going to trail using the EMAs that are already on our screen. So I'm going to hold the other half until we get a close above this yellow EMA for me. So I'm going to press play and let that continue. And the last half of my position, or less, is going to be able to ride out the rest of this momentum. And right there, right here on this candle, a few candles back, this one right here. Do you see this candle? Let me zoom in. This candle for me was the first candle to close above the yellow line. I am now closing the rest of my position. Okay? So we caught a 2-to-1 risk to reward up here, and then we are going to close the rest out here. So let's do a quick little replay of what that actually might look like with the P&L buttons, with the buy and sell practice buttons. Okay. So I've got finger on the trigger. We're going to do, we'll do 10 contracts short. Let me go back. I was getting my sizing set up. Okay. Press play. And the moment I get that resumption candle, boom, short 10 contracts. My stop goes above this area. And I'm going to pause because I want to make sure I take 5 contracts off. So I'm going to go and adjust this to 5. And now I'm going to buy at limit 5 contracts right here at my take profit. So I'm cutting half of my risk off right there. Okay? I'll speed this up a little bit. Boom, we sold half into strength. Well, technically we bought half back into strength because we're short. But we sold short 10 contracts. We've just closed half of our position at that 2-to-1. And now we're going to let the rest of it ride at break even. So not only have I profited on this trade, but now I have a risk-free environment to let more of this trade play out. Okay? So I'm going to go ahead and hit play, fast forward a little bit, because you know what happens. We're waiting for that first close above the EMA. I'm going to slow it down just slightly here. Right there. So I'm going to go ahead and manually close the other half. And remember, this was just 10 contracts. 10 micros is just a single NASDAQ contract for futures on the standard non-micro. I forget what it's called. But just so you can get an idea, this size wasn't that crazy. This is a realistic number that you can achieve through consistent approach in the market. Okay? How much did we make on this trade? How much did we make? We just made $8,120. The second half of that trade was risk-free. We risked no additional capital. We didn't risk any of our stop loss besides that first 2-to-1. So we really cut a lot of our risk out so quickly when we went to break even after the 2-to-1. That's my style. That's how I use this indicator. That's how I use the definition of the trend to align me in my trading session. Okay? So remember, we don't have to predict anything. My EMAs told me that as we crossed below this yellow line on the higher time frame, that we were definitely in the short bias direction. Then I waited for key levels to break so things could really get heated up. My indicator tracked all that for me. I didn't need to necessarily zoom out. I knew because once it was failing in the beginning of the day, it started to tell me. It started to tell me to wait, be patient, wait for the further breakdown, wait for key levels to break. And that keeps me on the right side of the trade. So I think this is such a great example of how you can benefit from an indicator like this. It doesn't tell you when to go click the buttons. It tells you when the high probability opportunities are for continuation. In this case, continuation short. Then we put risk on using defined rules. If you want specific rules, if you want more examples on how we can actually profit from this type of move, join my Discord. There's a free version. You get tons of information on there. And if you want my actual indicator, you want my exact screen, I'll show you if I turn it off and on what my indicator is doing. It's drawing everything for me. Volume, EMAs, VWAP, key levels, all of those things automatically. How helpful would that be for a trader that's looking for consistency? So helpful to keep you aligned with the trend. How do we define the trend? We zoom out, we look at the higher time frame. When we zoom in, we use our table on my custom indicator to help identify the trend real time as it gets adjusted through the trading session, right? To keep us on the right side of the trade. So that's it for today's video. Go check out my Discord. If you're interested in my indicator, it is available to the public for a fee. Go look at the Discord and check it out. I'm asking a modest like 20 bucks, I believe, right now. That's going to change in time, so get in while you can. I'm even willing to give select individuals free access because it's so early in the release. So if you're interested, join the Discord. Be an early participant. This is a new channel, a new community that I'm growing, and I'm sharing some awesome, useful tools to help you succeed as a trader. So, hopefully you gained information today about how we define the trend. At least get the gears turning for you and understanding on what that might look like for a consistently profitable trader. We use the higher time frame context when we zoom in to execute trades. My indicator does all the hard work for me. I built this custom to aid me, and due to so much request for this to go public, I've officially shared it. So I hope you enjoyed this. If you want access, go hit up my Discord. But otherwise, go check out my other videos. Don't forget to like and subscribe. Comment below what you want to see next. What would you like me to teach next? Go comment below. I appreciate you guys so much, and I hope you have a great day. See you next time.